We're going to take a look at Bitcoin, which is a position that we have owned in pretty high quantities down to very small quantities for several years now. We're seeing some very interesting developments, and I just wanted to get into that and what we're expecting and levels that we think this rally could go to after some kind of a pullback. Hello, everyone. Knox Ridley here, portfolio manager with the IO Fund. And this is our weekly broad market update. And we're going to deviate from the broad market this week. We're going to take a look at Bitcoin, which is a position that we have owned in pretty high quantities down to very small quantities for several years now. We're seeing some very interesting developments. And I just wanted to get into that and what we're expecting and levels that we think this rally could go to after some kind of a pullback. But what we're looking at here, this is a 2-day chart of Bitcoin, and what really interests me is the uptrend, the structure of the uptrend off of the late 2008 low. And you can clearly see we have 1, 2, 3, 4 waves up, and this suggests a fifth wave structure is likely. And so we've been looking for this. We've been counting this for a while. This went down lower than we were anticipating. We sold quite a bit of Bitcoin up in here, bought back here, sold a lot right in here. And we've tried a few times to catch these lows and stopped out. But our targets were around 25, sub 30, 25 is where we're expecting this to go. And we went down lower than that, which totally fine with. That's the whole reason why we'll stop out of a position. But we started accumulating again. And I wanted to show you the two counts that I see in play in the next higher probability move, which is present within both. So the blue count is the primary one I'm looking at. This has been our primary for years now. We have a first wave, second wave, third wave, A, B, C. This was the end of the fourth wave. And we're starting a fifth wave, which could take us up to the 77,000 range, potentially higher if we really get going. And so the structure of this move off the low, coupled with the structure of the pullback and the breakout, is going to tell us everything. Right now, we're still developing the first move off the low, which we'll get into a little later. The other scenario is that we have a 1, 2, 3, 4, 5, and that was the major top. And this is the first leg of a major drawdown, and what we're in is the corrective rally, which would still take us up to 38, I believe. 38.40 would be a pretty high probability if this is what's going on right here, and that would be followed by the final leg in this much deeper and drawn out bear market. I have a problem with that one. If you study Bitcoin going back, Bitcoin is really prone to extended fifth waves. And this is a very shallow, weak fifth wave that followed a third wave right here that really wasn't that substantial compared to the structure. So I have a lot of problems with that structure, but the issue I have with the blue count is this is a really deep fourth wave, really deep in time and price. So either way you slice it, there's some issues. But this is the primary structure we're looking at. So if we analyze what's going on here, what we want to see is a 5-wave move develop off that low. And so let's take a look at that right now. We'll go to the 15-minute chart. Actually, no, I think the 4-hour will be just fine. So far, what we're looking at is 1 wave, 2 waves, clear third wave right here, which is extending. And Bitcoin is also prone for pretty shallow fourth waves. So this is enough to constitute a fourth wave, just a kind of a jumbled mess that goes sideways. And what we would need to see is a move higher to get that final fifth wave. That would be strong confirmation that that blue count that I showed you is increasing in probabilities. And so what I'd want to see is a move higher towards 25, 26, followed by a 3-wave retrace that takes us down into this region right here. Now, if we actually fail to get this fifth wave higher and instead break down below 20,000, then this structure is over. What we had is what we basically have is 3 waves up, which is corrective. We need that fifth wave in order to get better confirmation that a new bull trend is starting. We believe that that's what's happening right now. And after the next pullback, that will be your buying opportunity. That's what we're targeting right now. But some more evidence on the targets that we're looking at, and to help support this thesis, is that if you go over to Optima, which is where we do all of our GAN work, two things I want to show you, a few things I want to show you actually. So first of all, let's take a look at this GAN fan off of this high right here. Now, the thing about GAN fans, you'll see them done wrong all the time. If you can't lock the ratio of your chart, then you can't do a GAN fan. The ratio of your chart must match the ratio of the actual fan right here. And what you're looking for are very specific angles. So we're looking for a 45-degree angle in this red line right here. And if we take a look at the angle, 46, yeah, it's pretty close, about 45. So you have a true 45-degree angle right here, which is exactly what you need. Otherwise, you're working with speed fans, and it's just not GAN. But GAN works off of angles, and it's pretty powerful stuff. So anyway, this is the main line right here. This is a 45-degree line. You can see how this rally failed at it. The FTX debacle happened right into it. And so it's really been the Great Wall of China for any attempt at a bounce. And what we got recently is a breakout, retest, and then launch off of that. That's very bullish, if you ask me. That's a signal that the geometry of this downtrend has been broken and has ended. Whether it's going to be a large degree B wave or the start of a new bull rally will be determined as we kind of push higher. The other fan I wanted to show you was here. This inflection point right here in 2019, which really started the powerful move of, off of the 2018 low. You can see how these angles have been really strong support and resistance throughout pretty much the entire trend. Very, very important angles. And this 1/8 angle right here, you can see right there, has been very powerful at support and resistance. Stopped this attempt right here, and we're just below it. So I would look at a run towards this as a pretty strong resistance zone. Now, how else do we find resistance? I like to use multiple techniques to find very precise and strong resistance zones or support zones. And so what we're going to do is we're going to take a look at Fibonacci first. And so let's do this. What we're doing is we're subdividing by the Fibonacci retracements, starting at the beginning of a very strong rally right here, and then looking for a strong rally down in the opposite direction. So right here we have a 1, 2, this is the start of a third wave, which is usually a really strong inflection point. So if we subdivide that range, we have these retracement zones. All right. And if we do the same thing from a different spot, you always start from the same breakout spot, and you find another strong bar like this. Here's another third wave, 1, 2, 3 right there. And we subdivide that range. We have 2 Fibonacci retracements from key inflection points within the trend. We put them together. This level comes up right here. You see these two Fibonacci confluence zones, different percentages coming together at the same price. So if we put a line there to mark it and get rid of that, 25.6 is important according to the Fibonacci techniques. Now, if we use GAN right here, GAN has a completely different way of identifying support and resistance. It's all about cycles. If we start from the beginning of this move right here and then go up, we have a series of important support and resistance zones. And then I like to do multiple. So if we start from the real big breakout moment right here, this is like the third wave within the third wave, if you will, and then go up, we have 2 areas that are using GAN's techniques. If you put those together, we have these confluence zones right there. You see? So this is the one that intrigues me the most. I'm going to put a line there. Okay, so that's what GAN says. GAN says 25.8. Fibonacci says 25.6. And if we put that fan on there, we have a really, really strong support resistance zone coming up in this 25, 26 range. Multiple techniques telling us so. And if we take a look at our momentum indicators, what we have, this is what you call negative reversal. When this is a composite index, it's basically the RSI with a with a momentum filter built into it. So when it makes a higher high from here to say here, and price makes a lower high, it's usually a warning that the uptrend is running on fumes. So what I'm looking for is some kind of turn up right here, maybe one more high into this zone up in here. We get a divergence right there. This is where you want to take some gains if you're trading this. And we would look for to see how the structure is on the retrace. If it's 3 waves, we look to get quite aggressive. If it's 5 waves, then we'd probably step aside and let that pattern play out. But I thought I'd just share some techniques on how we identify very precise support and resistance zones, and also talk about developments in Bitcoin, which is has been a relatively big holding within our portfolios for some time, and it's starting to become we're starting to accumulate after selling and stopping out for some time now. So anyway, that's all we have today. If you like what you see, then you can sign up at our YouTube channel. We do one of these a week, most of the time on broad market analysis. Every once in a while, we'll throw in a stock or a crypto like Bitcoin. We do this kind of in-depth analysis on a fundamental and technical level while managing a live tech portfolio in real time at the iofund.com, and you can sign up there. Thank you very much.